traders, got ourselves an interesting open in the week. Actually, very interesting reaction on Friday to a weak NFP. You got a very strong short squeeze in the US dollar. Now, I wasn't totally against that, given that we had sort of two trade ideas running into that announcement. And the first one was on a strong number. You want to be selling the dollar yen on a rally, right? And on a weak number, you want to be selling the Aussie on a rally. And so we got the latter. We got the Aussie having a little spike higher. We sold immediately into it, and that created a good sell-off. Didn't come from what I was expecting, though. Now, you don't look a gift horse in the mouse. You're going to get lucky every now and again. This was a little bit lucky in the sense that, I wasn't really relying on the US dollar squeeze happening. I was relying on risk off, and it wasn't risk off. Risk actually bounced. Dollar yen bounced. It was just straight US dollar strength. So I got it another way with the Aussie dollar to the downside. That being said, because it's not the way I wanted it to happen, even though we've broken this very key support here, I'm going to take a little bit off the table here. I just don't trust this move. I don't understand it, and I don't like it. So much negativity in the market, and yet stocks are strong and dollar yen is strong. Dollar yen was extremely strong off that 110 level. Look at these candles just begging us to have a short squeeze, and a short squeeze is much more dangerous than a rally on good data. So selling the dollar yen on good data is easy to do. Selling the dollar yen in a short squeeze is a little bit harder and can definitely get more dangerous. You don't really want to be in the middle of a short squeeze if it's going to 113. Same with gold. Gold broke previous highs, was looking very strong. And then we had that weak number, and then we had that reversal back underneath that level. This is the same sort of catching people on the wrong side of the market price action that is very dangerous. Easily we can have a second leg down here to 1236. That's where I would be considering buying it. That would put the dollar yen back towards 112.50, 113, and that would catch the market off guard. And that would put, unfortunately, that put euro down towards 105. I think the French election risk is severely overstated, and/or any sort of Le Pen chance is negligible. So I'm happy to be buying the euro towards 105. Happy to be selling dollar yen towards 113, and buying gold towards 1240. But I will be careful with this. This is a dangerous sort of opening first move here by the US dollar in the last 24 hours, last 3 trading sessions, and I don't want to go too early. So I'm going to be sitting on my hands a little bit actually here. This is half the reason I'm taking profit on this Aussie dollar. Strong stock, strong dollar yen is not the environment you sell the Aussie in usually. Now, Aussie dollar is getting dragged down by commodity prices. Iron ore continues to collapse, so it's got its own reasons to be selling off. But the thing that was the background that we were hoping for, because we're short Aussie into the weekend, we're hoping for some negative headlines. It's like the US and China are now best friends. Looks like they've got some beef and something else, restrictions dropped. A couple of little concessions trade-wise. Acknowledgement that the US is too big a trade deficit with China. Things were actually quite peaceful. No walking out. And US was showing some strength with its Syria bombing, perhaps, and also it's moving its fleet towards North Korea. Perhaps China was like, "Ooh, respect that." That they like that sort of thing. Can't really challenge them today. I mean, sort of gave them a little bit, but the takeaway is that you didn't get that sell-off on the Aussie on the back of that. You got the sell-off on the Aussie only on this continuing unease about commodity prices. And also just the technical side of it. Now, I understand it looks terrible on the chart, and I'm short, right? I want it to go lower. I just don't like this sort of sell-off. I like a fast sell-off. Aussie dollar is not the sort of thing which grinds lower. It's the sort of thing which punches lower, and that's what I want with my Aussie dollar sell-off. I don't want this grind lower. That opens the door to risk on led reversals by Aussie yen and by Euro Aussie selling, and you can see Euro Aussie stalling a little bit here. So, and Aussie yen is if anything is holding as well. Where are you, Aussie yen? Yeah, it's holding as well. So yeah, this is pretty mixed, pretty interesting market. Now, obviously, we get a lot of opportunity if it wants to extend. The US dollar rebound extends towards that 1240 for the gold and towards 105 for the euro. I'm happy to be in that, and I'm happy with dollar yen to be selling above 112 towards 113. Just gonna have to wait and see. I think there's a lot more uncertainty going to be happening this year, and I'm happy to sell into risk. I don't think Trump's going to have a very easy time getting anything through. I don't think just geopolitical is going to be a very smooth ride either, and it wouldn't take much to rock the boat. And so I think this is short term little bounce. Yeah, I was putting the wrong code in, and that's why it wasn't working for the first couple of times there this morning, guys. So yeah, so the first thing I've done is I've taken a little bit of profit on the Aussie dollar. It still looks like it's going lower. I just don't want to be messing around too much with profits in a market which I don't fully understand where it's going. Look, we're in the middle of a short squeeze here on the dollar yen, and it's quite evident, and a long squeeze on the gold. So things can get a little messy in terms of why we are in the trade. Yeah, if you don't understand, just get to the outside. Now, if it looks like it's just a one-day event, and by that we see dollar yen back below 111, gold back towards 1260, euro back above 106.30, 40, and pound back towards 124.50. By the time we come in to do our stream tomorrow, we can look tentatively to get back into some of our core positions. I'm happy with that, and that sort of environment shouldn't really allow the Aussie to rally too much. It might be able to get back above 75, but it would be pretty precarious above there. Really, the other side of this coin is what's going on with the stock markets, and they're holding up. So if the Dow continues to hold above 2,500, then the move back down to 20,000, which would be a move with dollar yen towards 108, is off the cards. In terms of the bond market, which is also very important, 2.3 has held on the US 10 years again. And so we have to be patient here. I think the market's in no mood to be moving quickly. So it tested 2.3 after that data on Friday, came straight back up. It's hard. It's hard. This market is not trendy at the moment. It's really making you work for your dollar. It's like the dollar bulls are just not capitulating, right? And there's still hope here that the Fed's going to be raising rates more than twice this year. That has to give way for us to get that next leg lower, I believe. Alright, there's some breaking news. South Korea and China agreed to take strong action against North Korea if it conducts any nuclear ICBM tests. Okay. China usually doesn't threaten North Korea. That's a little bit different. Yeah, it's quite a subdued market, even though we do have all these big news stories out there. It makes it a little bit hard to predict, what's going on. If we were doing streaming 4 years ago, 3 years ago, these streams would be so different. Like literally, as we streamed, we would be seeing price action nearly every time. The movement, and I was looking at the studies of this. The daily average range of half these pairs was doubled. Yeah, I mean, this movement that you saw in the Aussie dollar on the daily chart would look like a 4-hour chart. Yeah, that's how different it was back in the day. These days it's just so slow that it's I think I think there's been an agreement at G20 to try and put the Forex market to sleep. You know, let's kill these traders by making it not fun. And you know, at the end of the day, probably what we have to do is just increase our trading size, right? When the market's so quiet that we you know, we have to sort of bet a little bit more when the ranging is so small. If you want to make the same amount of money anyway. I mean, pound yen obviously is still giving us the, you know, the 200 pip moves in a day, but that used to be very regular, and 400 pip, 500 pip moves used to be the big moves. Yeah, so it's a different sort of world now. If you look at the thing which tracks sort of volatility, it's the VIX, and it's at all-time lows. So this is probably not this is probably not the future of volatility. You think volatility will pick up again, and with the machines involved in a lot of the pricing, while it's a little bit more efficient, and during times of less headline, the market is a little quieter, I suppose you would say. When things really break down, you've seen already a few flash crashes, and that's because of the lack of humans sitting there putting in orders. These machines all pull the orders at once, then you do get those gapping, you know, significant gapping, like you got, you know, the breakdown in S&P, the breakdown in the flash crash, the breakdown in the Brexit post crash. That sort of stuff is going to happen and continue to happen, because there isn't just the ability to backstop at the moment. So, you know, volatility will definitely pick up when things get a little bit more uncertain. Now, at the moment, everyone's just like holding the status quo. You know? But you can imagine in the future when everyone's got higher interest rates, there's a little bit more up for grabs. And it's not like interest rates are going to remain super low forever. Everyone will be raising rates at some point. When everyone's just on the sidelines, Japan, Europe, pound, Aussie, Kiwi, everyone's zero, you hit expectations for the next 12 months, then it's hard. It's hard to get big moves. But, you know, if you're not in the Aussie, just give it a couple of days here. See if it bounces back up. If you're looking for a trade today, you can look to buy dollar yen on the dip here. It's got room to move to the top side still. Doesn't make sense to me to be buying this, but it looks like it wants to go high. It's also the trade of the week for a few banks. Morgan Stanley, Commerce Bank as well, buying Kiwi. But still a few banks are still very negative on this. Citibank's negative, Deutsche Bank's very negative. And we'll have a look at some of that, yeah, going forward. I was very surprised that we held 110 so easily. But it's definitely happened like that, so it's part of the game. Can't be right all the time. And look, it's not a done deal. You know, there is a way the dollar yen goes back down. It just requires those US yields to sort of come back down as well. A stock market weakness. That's just not happening at the moment either. Alright, let's have a look, guys, at some of the bank reports from over the weekend and this morning. Bank of America, yen strength, overdone. Dollar yen's tested 110 5 times including today over the past 2 weeks. Pair has not resumed its rally as quickly as we expected, but we believe the medium-term uptrend has not ended. You know, I don't either, but you know, I think the medium-term, maybe longer-term, is upside, but downside, I'm, you know, a bit hesitant here. Alright, so while the relationship with the US 10-year, which is basically the only thing moving, because the Japanese 10-year doesn't move, is, you can see there's a very strong relationship, but it hasn't really caught up to it. It never really got past that 118 level, and the market should have really been up to 110. So it's about 5 yen under price at the moment, according to this model. And perhaps that is, sort of just a half the reason if things settle down, you can get dollar yen to rally just in general. I mean, look, the US is raising again this year. It's just a little bit later in the year, right? So perhaps we have to get through a couple of months of muddling through. And range trading argument makes a lot of sense in this market. 105 to 108, 110 to sort of 113, 114, 115 even in a stronger move. Below 110 does open up the door to 108, but it's not really easy to see 105. So expecting support on dips every time the market falls 150 points, 200 points in dollar yen is pretty sensible. And if dollar yen and euro is not moving anywhere, then dollar yen can't really, go below 105. You'd expect. I think the risks are definitely skewed medium term to the top side for dollar yen. It just requires Trump to get through a tax plan, right? A tax plan and infrastructure spending plan, and dollar yen's on the way to 120. That just seems so far away at the moment that we're not pricing it in. But perhaps he can learn on the job and get better at this political thing. He's still pretty new to the whole game of negotiating with Democrats and the Republican Party. If he gains a few successes, perhaps everything changes, sentiment changes, geopolitical things settle down, then perhaps the market can get back to the Fed. There's been all these moves by the central banks to sort of delay markets' expectations. You've seen that with RBNZ, then the Fed, then the ECB. Everyone's playing this delay game that's keeping volatility low and jawboning their currencies, basically. But that can't continue forever. But yeah, short term, what that does is keep us in these ranges. CAD Swiss, Jesus, Drillman, that's an outside one, mate. Can I have a little look at it? Oh, it's very strong. I mean, look, it should be strong with oil so strong. Alright, now anytime you're trading any of the Swiss pairs, and this is very important, you need to keep an eye on Euro Swiss. Euro Swiss is the major of the Swiss pairs. Dollar Swiss is not. Euro Swiss is the major. Alright, so that's a funny little change in the game. So how Euro Swiss is going, and depending on where it is inside its little range, because it ranges as well. I mean, it's not too high. If we were at 108, or relatively high in its previous little ranges, then I'd be more concerned about the ability for this pair to extend. But with Euro Swiss being so low, then CAD Swiss has the opportunity here to rally further with the Euro Swiss when it pops, which it can do, say post Le Pen, post French elections in a couple of weeks. But straight right now, it's much more to do with CAD strength, underperformance or strength, and that's to do with oil. So, and that local data from Canada wasn't too bad. So yeah, I don't mind it. It looks strong, probably a little high. Definitely not something I trade a lot, but it looks alright. I mean, it's trying to break back into the previous range, right? I don't think there's any reason to be selling right now. And this is a very shallow sort of dip, isn't it? So, yeah, we'll see. I mean, there's no reason to make decisions here. Yeah, just see if we can break previous highs, consolidate above, and then buy. See what oil does. Oil looks pretty strong, though, doesn't it? Yeah. Oil's got that trendy nature. Now oil, in terms of its movements, has only got a couple of dollars left before it's some key level though. So perhaps you're a little late to that trade. I'm just talking on the face of it. You know, what's driving this trade is a fair bit of oil movement, or it had seen a fair bit of oil movement. So while it can break back up into here, it's looks like it's a fairly slow moving pair as well. The Canadian dollar. See, you know, Canadian dollar is sort of like the Aussie in terms of its 135 as big resistance, but it hasn't looked like threatening it yet. Yeah, that's a tough one, man. That's a tough one. No, it's not a theme that I look at much. So the Aussie dollar, sorry, the Canadian dollar is not the one I trade. I trade the Aussie dollar, so I can understand it a bit more. The Canadian dollar is the US sessions Aussie dollar. So you guys probably have a little bit, if you're from the US anyway, you probably have a bit of understanding on it. And it's an interesting one to get caught up in though. I mean, how do you even stumble across it? Oh, you'd expect Aussie CAD to be getting destroyed. Like straight up, I'm not even trading it, or haven't looked at it for a week. But you expect it to be getting destroyed. Yeah, it is. And it had a really nice bounce, didn't it? So, ooh. So, I suspect low. Just the path of least resistance is low. Probably easier to be straight short straight short Aussie US. Don't have to worry about oil movement. But if you're looking at, you know, if there was such a thing as trading commodities against each other, and one of them was oil versus, sorry, iron ore versus oil, it would look like this, that chart. And maybe even more exaggerated to the downside. So yeah, there's reasons for this to be happening. But you're not early to that trade either, guys, so like you can't go trading Aussie CAD without a good understanding of the Aussie. So Aussie CAD, yeah, Aussie looks like it's weak, it's broken that key support. Aussie dollar breaks back above it, then all of a sudden you're getting neutral signals. You're getting neutral signals on the Aussie, and if oil starts to stall, then you're getting neutral signals on the Canadian dollar, and the trade becomes harder, right? The easy money, the sharper moves have happened. It's like trading dollar yen at 110, right? You don't need to do it. You shouldn't do it. People are asking me if I can buy off 110. I'm like, yeah, it's a big level, but I'm not into it. Not the 5th time. And it was the 5th time. Yeah, I mean, it has held multiple times now, but you know, I was thinking that, geez, it's just a matter of time before this breaks now. Obviously that huge rally, and now everyone's looking to the top side rather than downside. But we're one Twitter away, right? One Twitter away before we have another test. And can it hold 6 times? Right, the main thing to note is progress and agreeing between balancing bilateral trade. Rex Tillerson said over the weekend US isn't interested in regime change in North Korea, but they are sending a US aircraft carrier towards it. This is Jim Reed from Deutsche Bank. It's a very, very good report summary. So some of the negativity of the NFP has been given towards the storm and the bad weather. So perhaps with that in the back of your mind, you know, all these analysts saying it's going to be weak. This is before it came out, and then it coming in weak is sort of not the hugest thing. If everyone expected it to be strong, and the only reason we expected it to be strong was because of ADP, but you know, that's not the clearest indicator of strength, that's for sure. Nothing else. It's a pretty light data week this week, guys. So Deutsche Bank's looking for 108 to 114 range. Another bank saying it's weather related. Yeah, speculators are hesitant because I'm like one of the main dollar yen buyers out there. Like if you view your dollar yen bull, I'm one of the dollar yen bulls. And if I'm hesitant, then I know the other dollar yen bulls are hesitant. So it's not like we all think crazy different stuff. And I talk to a lot of traders, and you know, all the dollar yen bulls pretty much talk the same stuff about, you know, increasing US yields, how they're going to happen, when it's going to happen, when's Fed going to raise rates, impact of inflation, when will Japan ever change, what's Trump's, you know, the wild card sort of stuff. Alright, so the main driver of the uptrend in dollar yen, initial stage of the Trump rally, was held to be dollar yen, US Treasury yield rise. 10-year yield 2.6, consistent with dollar yen 115. At 3.0, it's dollar yen 120. They're forecasting 2.75, so they're looking for currency towards 117. Let's see if anything happens to delay that sort of trajectory. We'll finish up with Barclays. So how quickly has the concern about US military action in Syria dissipated? I mean, it's crazy how quickly things are sort of, the news cycle these days is so quick. You know, we're already on to China, and then probably past China, shortly onto something else, North Korea. Then past North Korea onto the next little scandal. Could be Russia. What we do get this week is US Treasury report, currency report. If they're going to name China a currency manipulator, they're going to do it in this report. I don't think they're going to do it. I don't think they're going to do it. In terms of iron ore, there was a big announcement in sort of Reuters anyway. Iron ore enters a bear market with its, you know, down 20% from highs now. That happened today. So at some point this week we're going to get the this report. Likely sometime later in the week. I doubt he's going to come across. After just meeting with President Z, I doubt he's going to call him a currency manipulator. It would be a surprise to me. Alright guys, let's have a look at some of the... Let's have a look at the trade ideas here. Oh Jesus. Quite a lot coming in here from Technobyte. Stolen something. Auto chartist. I wonder if this is Morth's own stuff. I have to ask him again where he's getting it from. Right, they're looking to sell if it gets below 110, probably buying if it doesn't. I will post an idea myself now. Probably going to stick with buying dollar yen here on the dip. I'm going to put my stop in at around one, pretty tight stop actually, 110.70. Take profit probably around a 112.40. This is mostly short covering and just the, you know, the shorts being squeezed here. But yeah, I can definitely see a second day of that coming. Just 110 is held too many times, and there isn't an NFP coming up to drag us lower. It would require stock markets to fall, and if stocks haven't fallen on Syria and North Korea, what's going to make them fall? So that's a sort of strange way to trade, but it's there's some sense there, yeah. You know, why are we into that trade? It's just because sort of logic dictates there isn't a way down for dollar yen right now, unless stock markets start falling for no reason. Which is possible, but unlikely. So let me show you how to put this on. A lot of the time the market is like that, right? You're just looking for an excuse to do a trade. Literally, bank traders, all the traders I know are like, yeah, it's not going low, it's going high. Shorts are worried now, so we're going to squeeze them out. And I'd like to be a part of that sort of groupthink, yeah? Makes them think they're smart. You'd think that US Treasury reports are not going to name anyone a currency manipulator as well. That would probably give a little free run for Japan to be sold off. Buying as 110 holds. Weak US data and negative world geopolitical headlines, market movement, short squeeze with another leg. Alright guys, post your trades if you know, this is what the community is all about. If you have your own trade, and you know, don't be shy about it. It's not for money, it's not for anything, it's just for you know, developing the community. The community is pretty gated now, it's harder for people to get in, so the more you put into it, the more you're going to get out, and there should be less spammy sort of randoms coming in and out, so should help. You know, if you want to develop into something nice, become a moderator, become a highly followed poster, even a streamer. I mean, that's the pathway. posting ideas, helping others. Alright guys, I'll be back tomorrow at 9 GMT. Good luck with your trades. It is interesting price action. It is a bit counterintuitive, it is dangerous. But I think we've got some opportunities this week too. Just sort of following the short-term movements. We'll see how it plans out. Back tomorrow.